Fifth session is on Use Case Showcase Workshop AA in Action. Let's welcome our moderators on dais, Ms. Ruchi Pai, Senior Practice Lead, Sahamati, Mr. Abhishek Varshney, Senior Lead Partnership, Sahamati, Mr. Rutvik Paikine, Policy and Communication Analyst, Sahamati. Let's put your hands together for that.
Hello everyone. It's good to be here. Thank you for coming. Before we start, we get into the session, I wanted to reflect a little bit on how the account aggregator ecosystem has really grown in the past 4 years. Which started out as we see that it was a very organic process of how the ecosystem has grown. It started out with 8 participants in I think September 2021, and now we are at more than 800 participants. And the room being full is also a testament that the ecosystem has found its the value has been recognized by the industry. So we'll go into the session. Is it not playing? Okay. So the idea of today's session is to understand how the ecosystem is making impact in the financial services industry at a very practical level. So we wanted to give you a glimpse into how different use cases, different applications of the ecosystem are taking ground. They are getting recognized by the industry, and also they're making mark in how different industries are actively adopting and making most use out of the applications. So initially it started out as a very plumbing sort of a mechanism. It was much better access to data, reliable data, secure and safe. But now we see that the evolution of the ecosystem has now grown into more innovative implementations. Earlier it was more about underwriting, more about holistic information, 360-degree view of customer finances. But right now it's more about how risk management can be enriched, how customers can really take a look at their portfolios, get better nudges into how their personal finance behaviors could be changed, how institutions can help customers manage their risks, and as well as how institutions themselves can proactively mitigate those risks emanating from either could be credit risk or market risks or whatever. So in that context, I think I would like to go directly into what the session is today about. So AA ecosystem has become a third layer of India's digital public infrastructure. Aadhaar laid the grounds for identity, payments was institutionalized and popularized by UPI, and now account aggregator ecosystem is laying the grounds for how consent-based data sharing, how account-to-account data sharing can happen in India, and how it can give rise to more innovative financial products, more inclusive financial services delivery, and more on. So we see that the ecosystem has found root. It has found, if you compare it to other DPIs, although Aadhaar is very, very mature, UPI is significantly more mature than AA. The AA ecosystem has crossed a very significant critical mass of penetration into 10% of India's adult population, which we feel is a very significant number. When we generally people who are working on AA know about what account aggregator ecosystem is, and we are fully neck deep into it. But when we take a step back and look at how it is impacting customers at a very granular level, it becomes much more real, much more. We get a perspective of how it is benefiting customers in India. So the basic thesis and what we think about is that data is itself a very important resource. It's a very quip that is used that data is the new oil, which everyone these days seems to use it. But what we think is that data goes much beyond oil. Oil is a very it's a rivalrous thing. It gets depleted. But you think of data, the more you use data, the more you create data. And the enriching of data in any financial service delivery has a lot of implications, mostly positive, but you need to think also about guardrails and stuff. So that is why when we think of consent-based data sharing, we need to think about how consent and user centricity is at the crux of any financial transaction. So this is more about how data can unlock a lot of value for customers in the ecosystem. And it goes beyond just microeconomic value to the customer per se, but to also more macroeconomic, how value can be created at second order, third order layers across the economy. And data will become much more important given how digital economy itself is evolving and becoming more central to any jurisdiction's economy for that matter. So this is Sahamati's journey and the account ecosystem's journey, which started out in 2016 with the RBI master directions coming into play, but continued with significant industry traction, Sahamati playing its part, and as well as definitely the regulators being the guiding force behind it. So this is, I think, I don't want to go too much into it, but the headline number that I would like to highlight is that currently, cumulatively, what the ecosystem has enabled is 500 crores of data fetched by institutions. So 500 crore times the ecosystem has enabled customers to use their data for certain financial service, be it lending, be it personal finance management, be it advisory, be it insurance, which is a significantly high number for anyone to understand, right? When we think about, generally we tend to think in terms of consents or accounts linked, but we look at more granular at a API level or a data fetch level, we see that the impact of ecosystem is much more than just at a consent level. So this is what I'm talking about is as a outcome of those financial data fetches, cumulatively in the last 4 years, this calculation is still FY'25. Around 6.5 crore financial institutions, 6.5 crore financial services have been delivered to customers in India, which is significantly huge. When we think of a not nascent anymore, but is becoming more emerging and a institutionalized ecosystem in India's financial services industry, this is definitely a testament to how going forward how this can revolutionize financial services. This is the general scale up. We see a significant month-on-month growth. So around 2 crore to 3 crores of consents are being facilitated by the ecosystem, and around 40 crore out of data fetches. And this is the breakup of FIPs in the ecosystem, which are very diverse, cross-sectoral, different types of license types, different FI types. Around 16 FI types are live. We are working on different other financial information types to be activated in the ecosystem. So the journey is uphill from now. We have leveraged a lot of low-hanging fruits, but also from an industry perspective and a practitioner perspective, we need to go beyond just benefiting from the better plumbing phase of the ecosystem and think of more innovative financial products, leveraging different types of financial information available. And again, on the FIU side as well, we have diverse institutions, diverse sectors, and these are the breakup of consents in FY'25. Although lending is very significant right now, in the course of this workshop, we also want to entrench this understanding that this is not just about lending, it's much more beyond that. This is a penetration exercise that we did to understand how ecosystem has really become a significant part of India's financial services industry. So around 12% of India's customers have used account aggregator in some form. And again, this must be more than that because it's a slightly older exercise that we did. So we can fairly assume it's around 13 to 14%. And lending is currently around 3% of India's lending sector, which is AA enabled. But going forward, we want to make it around 10 to 15 in the next couple of years. Although personal lending in itself is around 10% in India right now, which is definitely going to go higher. So I think that was more from a overview perspective. Now we'll go much more into different sectors, and Abhishek will walk you through the lending use cases.
Hi all, thank you. मेरा नाम अभिषेक है and next 15 minutes में I'll try to take you through all the lending use cases which, as Rutvik said, is one of the most powerful use cases initially we have seen on account aggregator. So before going ahead, hello. Yeah, before moving ahead, one of the 2-3 things which during our interactions we have seen is hello. ये mic बंद कर दो. Hello. Is it audible? Yeah. So during our interaction with many of the lenders, there are 3 things which clearly comes out now is one is account aggregator has become a preferred mode of data sharing. What if we talk about some penetration number, generally the companies who have implemented across the products around 60 to 65% of overall loan sourced comes through account aggregator, and we have seen conversion around 70 to 75% conversion rate across the AA's life cycle, which used to be around 30-35% before 2 years or 1 year back. So these numbers are quite motivating, and initially, although lending started with many of the companies started basic use case of underwriting, but the use cases are spread across the life cycle. There are some of the use cases which are highlighted. These use cases are something which companies are still evaluating, and these are in the initial level of adoption. Otherwise, if you see on onboarding and underwriting side, for every lender, I have myself been a lender for a decade and realized how much, especially I used to work in a housing finance company, and we clearly saw that getting complete data and as well as getting the data timely and getting the overall data from the customer, including its banking, security data, used to be very tough task. मतलब people I remember we used to market minimum data कि आपका loan minimum document में कर देंगे. Now with account aggregator we have moved to the era जहाँ पे data तो बहुत है, it's humongous data with customer consent, but how lender have to use it is something now lenders have started thinking over by building a strong BREs which can ingest different forms or different types of data which they can get from account aggregator. So account aggregator on onboarding side have really helped lenders to reduce the TAT which customer used to spend a lot of time while filling up the form. Also many a times these forms, the information given by the customer used to be wrong, and now with account aggregator you have that power to actually pre-fill the information and ask customer if to vet it. Apart from this, from bank's perspective, we are seeing that they are looking account aggregator to ensure that the identity of the customer is intact, in sense the customer whom they are onboarding is the same customer whose documents they have got. So onboarding and underwriting is one of the use case. On security assessment, especially new, since there are 16 different data types which are now available, companies are thinking how they can use this data so that they can offer a good maybe a product like LAS with your security data. And when you talk about secured lending, evaluation of guarantors, co-borrowers, plus even at the time of own contribution check, which generally happens in housing finance, these all can be digitized and automated and can reduce a significant TAT which lender used to take when they used to ask the same data from the customers. Pre-sanction and disbursement stage, I think we all are aware, especially in business loans, there is a practice of multiple funding. So generally the intermediaries who are DSAs submits the file with various lender at the same time and try to take disbursement at the same time, because the bureau reporting is on a monthly basis right now. The bureau is not sufficient to for the lender to ensure that to check if the customer has taken any other loan from any other institute. Account aggregator gives them the power with real-time banking data, you can now see if the customer has got some disbursement as a real from some other institute and can stop parallel funding. That is one of the bigger use cases, which especially in BL can be a key enabler. A lot of fraud cases we have seen, especially if you see news articles, we have seen that a lot of NPAs happens because there was no control on end use. So customer, when they used to when they submit the loan application and specify a particular end use which is for their business generation purpose or maybe some other specified person, but actually the diversion of fund is happening. That is one of the major concern, which through account aggregator, now NBFCs and banks have come on a level playing ground when now NBFCs can keep watching the customer during the loan tenure and see if there are early warning signals or if there is any diversion of funds that can be at the same time can be corrected and a customer outreach can happen. Apart from this, on monitoring, we are seeing corporate use cases coming in where monitoring of internal employees, monitoring of field agents or collection agencies are being done by the lenders to ensure that there are no money transaction happening between the customers and the sales team or the agents who are collecting money, because many a times what in the lending on ground we have seen is that these sales or collection agents collect the money from the customer but don't submit or credit the money to the loan account, and eventually that's a loss for the customer and eventually the loss of trust for the lender itself. On collection and recovery, many of the cases what we have seen, especially with financial inclusion side, where customers don't have much digital footprints, but lenders are keen to take collection consent because collecting EMI digitally from the customer was a big task. Now with account aggregator collection consent, they can have access to the balances of the customer, and the lenders can strategize when to present the NACH so that there is high success rate of collection of the EMI, as well as it saves a huge cost from a customer point of view, where previously it was not intelligent, I would say, kind of NACH presentation. Now with with more sense of what is the current balance, and at the right time you can bank the EMI, even the customer saves a lot of money, because if he don't have any bank balance and the EMI bounces, there are charges from the bank side and NBFC side, which is additional cost to the lender from a customer point of view. And other use cases on skip tracing and personalized settlement offers are there. These are the further, I think I have covered a lot during my discussion right now, but autofilling is one of the use case. Profile check. With account aggregator, you get profile information of a customer, and many times you have, as a lender, you have to validate customer that whatever details he is giving, and as an identity of a customer, you are ensuring if there are multiple sources from which you can get this data for the customer and cross validate, it just reconfirms that you are giving loan to the right customers. One of the lender which we interacted, especially in PM Sonidhi Yojana, one of the banks who was using account aggregator, they were using one of the parameter which you get is account opening date, so which tells you the vintage of the account, and it is one another variable through which you can identify if customer has some banking footprints and banking habits. And similarly, identity and ownership confirmation you can get through account aggregator. So it is just enhancing your customer due diligence through account aggregator. Loan underwriting and one-time consent is on risk assessment underwriting. We are seeing evaluation of co-borrowers, pre-disbursement check, as I said, about parallel funding, and EMI setting. Majorly, how lending works is there are 2-3 dates which the lenders used to get money from the customer, and it was the EMI date as 5, 10, 15. Now lenders are evaluating if they can fix a particular date basis the customer cash flows. Maybe if he is getting a salary on 15 date, and then they can prioritize and set a different EMI date for the customer, eventually giving comfort to the customer and more personalized offer. because the data is coming directly from the source. There is no fraud, and the underwriter is also confident. And I remember, at least in HL Journeys, Housing Finance, in FCU team, there was a huge stat because they used to verify some of the transactions, and verification used to be on certain transaction which was sampled by FCU team. Now with account aggregator, you are getting 100% data from the source. The underwriter is rest assured that none of the other transaction which is not even sampled is maybe has a chance of fraud. So companies are saving a lot of money here in terms of, like one of the company I interacted, they were telling me that they plan to have 25-30% more business in coming quarter, but because of account aggregator, they are not increasing their FCU or fraud, the money they used to spend on fraud and increasing the team. They are still working with the same team, so that is another efficiency which account aggregator is bringing in. Monitoring of monitoring consent, which give you access of four times pull of banking or financial data of a customer, is being used for early warning signals. I remember there were only two ways how you monitor the portfolio of as a lender, which was, one is seeing your own repayment track record of a customer, the loan you have given, plus the bureau scrub which you used to do. Now with account aggregator, you have more real data about the real how he has been performing and what has been the cash flows. So the early warning signals have become more strong now, and that is one use case which the lenders are evaluating and working on. And we are seeing that many of the lenders have started using this. Even RBI is pushing of having more strong early warning signals, early warning systems being used by the lenders. And end-use monitoring, as I said, it is being one of the bigger use cases. You can track what is how the lenders are using funds for collection and optimizing collection and through recurring consent. Collection consent we have standardized while working with the industry, which gives you a sense of what is the current balances of a customer at that particular date. And it has been helping in terms of devising the NACH strategy. One of the lenders said that while using account aggregator, they reported 35% improvement in e-NACH representation rate. It is just because you have now a sense of what the balance of customer is, eventually giving comfort to lender as well as from a customer point of view, while customer saves a lot of money because earlier the NACH was presented again and again, and it used to give a huge cost of bounce to the customer and penal charges to the customer because of EMI not getting debited. So that are the other use cases we are aggressively seeing lenders adopting. So case study from one of the lender is now they are seeing 5 to 10% of incremental business and 7x better collection efficiency and 300 crore of more business every month because they have multiple product line on the lending side. They also do literate customer on financial literacy through credit and health borrowing potentials. We regularly on every 6 months do a exercise where we do a survey with top lenders, and the survey results are very encouraging. Every year you are seeing a drastic improvement, especially from FY24 to 25. There is 4x growth in terms of volume of loans and value of loans as well. So now in FY25 alone we did around 1 lakh crore of disbursement happening, and average ticket size is decreasing because we are seeing a kind of trend where many of the unsecured lenders who were very bullish on PL now shifting towards micro LAP or small business loan. That was a trend which we saw while we collected these numbers. Yeah, so I think I'll hand over to Ruchi for the use cases on capital markets and insurance.
Hello, everybody. I'm Ruchi. Yeah. Abhishek deserves a round of applause because he manages one of the biggest sector which account aggregator enables. I don't know how to accommodate next 20 minutes talking about the biggest DPI in the country right now, the next biggest thing. However, a testimony to that is that there are a lot of stalls that I saw in the pavilion and in Jasmine. And if you pick up any of these brochures that they're giving, you will see the word account aggregator. So I'm assuming the people who are sitting here do not need to know anything about the basics. You already know about account aggregator, and we've already gone way deep into what all the account aggregator is doing for its businesses, for the other businesses. So if y'all are from an organization that is still on the fence about account aggregator or needs to know more, please reach out to Sahamati. Any one of us at Sahamati. So when we started 4 or 5 years ago, it used to be what is account aggregator. Then soon came a time when account aggregator and credit or loans or lending was spoken about in the same breath. And today, lending and account aggregator, of course, is spoken about in a much more deeper way. However, what's come out in the last 4 years is its impact. This DPI's impact in the capital markets, larger, and now progressively in the insurance sector. What we are going to talk about is how in the last 4 years, the early adopters amongst the capital market industry and the insurance industry have been able to take immense benefit of this DPI. So, yeah. So if you look at personal finance management as a use case of account aggregator, we are seeing about 205 lakh customers who have got benefited out of this use case. 205 lakh people want to see consolidated view of their finances on a particular app, on a particular page. An account aggregator has been able to do that, which today, before account aggregator, it was a very big task. You had your e-CAS and various other ways, the consolidated statements that used to help you, but still it was not giving you an overall view, an analytical view, insights into where you are standing in your financial journey. Account aggregator has enabled that for 205 lakh customers. On the broking side, we are seeing about 84.20 lakh customers who have benefited out of the quick and very easy data sharing enabled via account aggregator, that people who trade in future and options have got benefited of this right now. In view of these numbers that have got flashed, I want to say that please go to our website, sahamati.org.in. We release reports. We release impact reports every 6 months on the lending industry and beyond lending industry, the impact of account aggregator on both these sites. Please go and have a look at these reports. And if you are thinking on how to go about implementation, what kind of impact people have already tasted, what kind of success people have already tasted, please have a look at that report. Sorry. Yes. So some of the use cases that the capital markets industry has seen is in the wealth management and advisory side, personal finance management side, and income verification for F&O segment. What we've mentioned is the companies. When we say FIUs, it's financial information users, which is your organizations that have implemented account aggregator. What kind of organizations have used what use cases? So, of course, you'll see investment advisors and banks using wealth management and advisory. Any one of y'all having famous banking apps of ICICI, Axis Bank, so on and so forth, any of these big banks, if you go to their apps now, you'll probably see a front-facing personal finance management feature, which is using in the back, on the behind, it's using account aggregator to pull your information and show you a consolidated view. Likewise, the same thing being done by some asset management companies, some AMCs, some NBFCs and some stockbrokers. And what we spoke about, income verification for futures and options, is being done by stockbrokers. Personal finance management, one of the biggest use cases. It's a very pleasant surprise actually in the last 4 years that we've seen. People who are pulling data to just get a consolidated view of their finances are almost making up 80% of the total data pulls that have happened in the last 4 years in account aggregator. The biggest impact on the customer is it, of course, gives him a clear view of his financial status. On the FIU it's an engagement. for an organization, if an organization is able to show you where you are standing on in terms of your financial well-being, then it automatically gives opportunities for engagement further and pushing their products further. And the categories that have been able to successfully do that are investment advisors and banks. Next thing we spoke about was income verification for future and options, which is being done by stockbrokers. What used to take days, weeks, months at times, where customer is going back to his bank, getting a bank statement either online through internet or, sometimes in case of PSUs also going back to the bank, getting a self-attested bank statement, giving it to the broker. Sometimes it's not of the last 6 months. Sometimes it is not clear. It goes into a system, gets read by the stockbroker, so on and so forth is now happening within seconds via account aggregator. Risk profiling, as we all know that if we want to invest in any financial product in the securities market, we need to do risk profiling. If I'm using robo advisory where probably I'm putting 5,000 rupees per month as part of an SIP, or I am putting 50 lakhs in a particular portfolio management services, in a particular bundle of investment accounts, I need to, the securities company, the investment company needs to know where I am, what is my profile, if I'm an equity investor, if I'm a balanced investor, if I'm an aggressive investor. That happens very easily via account aggregator because one is the subjective profiling and another is the objective profiling, and account aggregator helps to do clear objective profiling of the customer. Wealth management and advisory, I'll not harp more about this. It's very much similar to investment advisory and risk profiling. So what has account aggregator enabled for people who are using personal finance management, in the sense who have implemented personal finance management and are using account aggregator? What it has been able to do is for every individual today that is sitting in this room, out in the country, it has been able to provide a kind of balance sheet of the customer. It has been able to show that how you can continuously move. You can take bigger informed decision by actually having a complete view of your overall financial health. So it moves what is probably being seen on an app can slowly move towards advisory and then go towards continuous net worth, continuous wealth creation. So that is what account aggregator has enabled in this country for investors like you and me. So what we see now, use cases that are taking shape in the credit industry. So we've spoken about investment advisory, we've spoken about futures and options. What we are seeing now is what are the newer use cases that are going to come. So if you are from a credit rating agency, or you are in AMCs or research analysts or broking firms or PMSs, these are the two kind of use cases that are taking shape. One is an accurate credit rating, because account aggregator enables GST information. Some credit rating agencies have been able to put that to use to do continuous credit rating. And as part of prohibition of insider trading compliance by SEBI, most of the securities industries, companies have to do continuous employee trading activity monitoring, which is to kind of avoid any kind of insider trading because they're privy to so much information. An account aggregator has made that entire process extremely easy. So HR departments and compliance departments of these companies are extremely happy because they have also become digital now. This is a little deeper into the same use case. We will be, like I said, these are also part of our reports that are available on our website. So you can access them and you can actually get deeper into these use cases. Same thing, both the use cases. So that was about capital markets. We've not kept a Q&A session separately. If you all have any really important question that is you all need to ask, please raise your hand and probably we'll accommodate that. So from capital markets, we moved to insurance. So as we spoke, account aggregator is today available to entities that belong, that are regulated by Reserve Bank of India, which is your banks, NBFCs, so on and so forth, by SEBI, by PFRDA, and by IRDA. So IRDA registered regulated companies have also been able to use account aggregator. However, a little less than what capital markets and RBI entities have been able to do. But the numbers that are now coming up and that are going to soon come up in the next year are going to be mind-boggling. The biggest use case that insurance industry has been able to implement is financial underwriting for life insurance. Every life insurance company, especially term insurance product, needs to go through financial underwriting, which today used to happen in a very mundane physical manner, has got converted into digital transfer of data. We've seen about 33,000 life insurance policies that have got issued using account aggregator as the preferred data sharing process. Financial underwriting has, so the entire data sharing via using account aggregator has made life very easy, especially for the insurance company, because what used to be very prone to fraud, forgery, is now replaced by completely legit, straight from the source information coming from the bank. And also underwriting process becomes easier, quicker, and less, of course, fraud prone. So we have some testimonials. We have one of the leading insurance companies that has shared a very impressive testimonial for account aggregator. They've said 50% of their customers opt for account aggregator-led journeys for data sharing. 50% of their financial underwriting customers. 8% better issuance of customers who have chosen account aggregator. 30% reduction in time, and this is extremely important for insurance companies, if anybody here belongs to one, to see that there's a 30% reduction of average time taken for issuance and gathering of financial information. And 65% of AA fetched information do not require manual underwriting, so they kind of go through their automated processes of underwriting and get completed. There is from procurement to issuance is completely digital journey. So the use cases that have gone ahead is what we've spoken about is the financial underwriting. However, what we are going to see in the coming months are these 4 use cases. One is proactive policy renewal monitoring. Basically, looking at account aggregator, getting information and telling the customer about using it as communications for persistency, ensuring that there is, people do pay up their premiums. If using account aggregator, they are able to view that there could be a premium paying problem, then the customer can be contacted and asked. There can be corrective measures that the organization can take to ensure there is no lapsation of the policy and the policy continues to be active. Reimbursement claim verification happens in claim cases where there is a reimbursement, not cashless, but reimbursement cases, to see that the claim request that has come and that has probably got paid up also is not it is compliant. It's not a fraud case. It's not a case where there is any kind of forgery that has happened. Fraud detections in reimbursements as well, to ensure that there is a reduction in fraud cases and better compliances, etc. So general insurance, health insurance, and life insurance companies have been able to determine these 3 stages where they think that they can implement account aggregator in the coming future. We also have, of course, detection of prior claims for no-claim bonus validation, where there is no-claim bonus related fraud that has happened initially by the customer, by anybody, by the agent, by the customer. They are looking at ways on how they can implement this infrastructure to look at the bank accounts of customers and agents to ensure any kind of pattern or trend that is that is out of the ordinary. And of course, agent monitoring as well for fraud detection. So these are a little details of the same thing that we spoke about listed. I will be happy to take you all through in person, or please access our report to have a look at it in detail. But all of these use cases we spoke about, we in these slides we've mentioned on how it can impact the customer and the organization. So I'll just run through them. We only have about 8 minutes left. Okay. So that was about insurance. Of course, anybody has any doubts, please reach out to us. We talk about the way forward, and I would, of course, request my colleague Abhishek also to chip into this discussion. What we've spoken about is use cases that are in the usual financial business, which is the lending industry and the securities industry. However, Sahamati is in discussion with other organizations to implement account aggregator in other beyond usual financial sector. So we have currently proposed or are piloting with various organizations on implementation of account aggregator for their use cases. So on the ONDC one, I would request Abhishek to speak.
So right now, if seen ONDC journeys, financial services, where the buyer apps are there, they are using account aggregator as one of the common framework for data exchange. So it's majorly a LSP A interaction which happens where LSP just redirects the customer to a journey where the consent for the respective lenders who are tied up with that particular LSP take consent and the data goes directly to the lenders for evaluation. So account ONDC uses that. We have another use case on with I4C where we are still working and deliberating on is right now when you have as a customer who has faced a fraud have to report this complaint on the I4C portal. He has to submit all the transaction related details manually. So while inputting the account numbers and the transaction value, there are a lot of mistakes which happens by the customer. Through account aggregator, they want to use a to digitize this, and through account aggregator, they want to track particular transaction so that there is no mismatch which happens, because time is value here. Because if I4C team gets the correct account on which the disbursement has or the fraud transaction money has gone, they can immediately block that account. So that is one of the use case we are deliberating with I4C. They have made the presentation to the RBI. I think the other use case on investor accreditation, Ruchi, you covered.
Yeah, so investor accreditation is basically something that is a concept that has been introduced by SEBI, especially for alternate investment fund. And there's a project and there are discussions happening on how account aggregator can be used as a ledger trail to do net worth assessment, which today is being done by a chartered accountant or various other means. How account aggregator, because account aggregator is the only rail that provides cross-sectoral investment and protection information of a customer and cash flow information of a customer, how it can be used as a ledger trail to a certain, to do the accreditation of the investor and then, take forward for investments. So AIF accreditation is something that is being worked upon.
The next use case is on nominee management. I think every one of us are aware about increasing unclaimed assets. So how account aggregator can play enabler in reducing the increasing unclaimed asset by bringing consolidated view of all your assets and where nominee are declared, not declared. We are also proposed to SEBI if there can be expansion in the schema where all the nominee related information can be exposed to certain licenses, maybe RA or RAs, where the customer can go and see all the assets and the nominees declared across those assets. It will become a one-stop solution for people to manage nominee related information. So that can be one of the future use cases. Right now in account aggregator, the schemas you only get if the nominee is declared or not. It's about, we have proposal is about expansion of schema while also standardizing the data fields which any financial institutes actually get from the customer at the time of onboarding. So DPDP rules are about to get rolled out, but account aggregator and consent managers are account aggregator is one of the implementation of consent management, and we have been it's for last 3-4 years we have seen how it has been used. Many a times this is common question which we get, what next on different FI types which are coming on board, and what about the expansion of the current schema. So these are 16 on the left hand side, you see 16 data point or different financial information you get from account aggregators. Many of the lenders started seeing how they can equip their BREs with more data sets so that they can give more personalized advice to the customers. New FI types which we are working on is on EPFO. If we can get this data, CBDT is another thing. A small savings schemes, post office data is one major source of when we talk about financial inclusion. That is there. SHG data through LocOS, credit card data is one thing which can be a big enabler, and payment wallets and PPIs data. There is representation on joint and non-sole accounts, which RBI is working on the approach how the consent will be taken, but we see that it should get rolled out soon. GSTR expansion, like right now in account aggregator you get only table GSTR 1, table 4 and 3B data, which is summary data, but industry wanted to have purchase side data as well, so that representation we have given. Also right now the coverage on bank side we are missing on payment banks, small finance banks, although 2 small finance banks are already live, but there are others which are not live, and urban cooperative banks which we are working on, and we have missed by mistake on district cooperative banks, so that is underway, which looks like if those get covered, I think on inclusion side a lot of work can be done. So as Sahamati and as a DPI, the foundation layer is that it has to be inclusive. So our approach has been how we can make account aggregator more inclusive one, and through ensuring that we expand the FI type so that the last mile, one of the initiative would be SHG data, which can unlock 10 crore of SHG women data, which was right now not visible, not on bureaus, not on banking. That can come. And apart from that, I think post office data, small savings schemes data can be a big enabler to get these people financial services. Also, while working and taking these DPIs to the last mile, we have to ensure that we properly there are proper guardrails and safety measures which are taken. So we are working on some similar work which can be rolled out for the industry. And also we understand that right now how account aggregator as a journey, our stage is majorly many of them are being used by assisted journey and digital journey which is self-serve, where people need to be literate. So we have worked on a voice-based consent mechanism, which we will roll out in one of the pilot and see what is the feedback. So that voice becomes more like through voice you can reach out to the last mile who is not educated. You can provide financial services to them. So that's our vision, and we have been working on it. I think these are the...
Yeah, I think we can just go through this. The team behind is telling us to keep quiet. We've spoken a lot. But
I think we covered all. This was the last
yes.
slide. Yeah.
And please feel free to get in touch with us at Sahamati. Our website is sahamati.org.in, and you can reach out to us at info@sahamati.org.in. If any one of you all wants to speak to us right now, we're available. But anything on account aggregator, reach out to us, go back to your companies, and please get it implemented, because better late than never. It's the next big thing that's going to be in India, just like the UPI story. So it's best for all of us to be part of the growth story. Thank you very much for being a great audience. Thanks a lot.